Okay guys, we have a very important video for all Tesla stock investors. We're going to cover a multitude of different things here in this video. Number one, Tesla stock down big following earnings, but yet the leveraged Tesla bull ETF is seeing some of the biggest inflows it has seen in its history. And when you look at some of these numbers, there's really a tale of two stories going on here. The bulls are even more bullish. The bears, well, they think they have something to hold on to. How long could this last? What's next for Tesla? We're going to talk about it. Now, if you are a Tesla stock investor, if you have been blessed by the almighty YouTube algorithm to come across this channel, well, you probably already know half the story is Tesla and what happens with Tesla. The other half of what moves Tesla stock is the broader markets and what happens with everything else. That's why we do our best to keep you up to speed with both of these, Tesla and the broader markets. Well, the NASDAQ on Friday closed near session lows down 1.5% and another 0.5%, or a quarter of 1%, excuse me, in after hours. We do have some pretty bad news coming out due to this Israel conflict. And this is the thing that could give you 20, 30, 40+% downside. It's really nothing to sneeze at here. The potential downside is massive with this situation. So I want to give you guys an update on that as well. We're going to look at some of the option activity on Friday. We are going to get into everything you need to know as a Tesla stock investor. So if you're ready, well, let's go. Let's get into it. If you're not, you better get ready quick because we're jumping straight into it. Hit that like button as well as subscribe to the channel. The best prescription for your complication is a subscription. So hit that subscribe button as well as let me know down below in the comment section. What do you think about this information? What do you think is coming next for the markets as well as Tesla stock? Are you buying the dip in Tesla? Are you waiting here? Are you deploying some capital? You're waiting to see if we go lower, or are you going all in right now? Let me know how you guys are playing this down below in the comment section. And again, if you guys would like to come trade with me live in real time, link down below in the description of this video. We're making trades on Tesla. We're making trades to hedge the portfolio. Earnings season is coming in hot and heavy. We're going to give you an update on the earnings that are coming out here for next week. Some of the interesting trade ideas that I'm seeing already, I will give you guys a little bit of that here in this video, but more in depth over there in the trading community. So if you guys want to be a part of it, link down below. Let's go ahead and get straight into it. Dip buyers flocked to Tesla bull ETF amid the stock sell-off. Investors piled into a leverage exchange traded fund that bets on upside in Tesla shares as the company's stock price sank following a weaker than expected earnings report. Tesla bull 1.5x shares ETF, Tesla, TSLO, the largest single stock ETF for bullish bets on Tesla shares, saw net daily inflows of 24.9 million on Thursday, according to Lipper data. The inflows came as the $833 million fund, which seeks to track 150% of Tesla's daily stock price performance, fell 14% on Thursday, while Tesla shares fell 9.3% to a 2-month low the day after CEO Elon Musk warned that high interest rates could sap demand for electric vehicles. Look at the numbers here. This total fund is worth $833 million. And they had $24.9 million worth of inflows on Thursday. That is impressive. Let's take a look at just what that actually is as far as a percentage of the daily fund. Divide that by 833 million. That's almost 3% of the total fund seeing inflows, or 3% of the total value of the fund worth in inflows on Thursday, let alone what the numbers are going to be on Friday. This is some serious dip buying activity from Tesla bulls. If you take a look at the option activity on Thursday for Tesla stock, this is actually surprising. Remember, Thursday was the day after earnings. That was when Tesla fell over 9%. You had 1,680 orders totaling $2.56 billion with a positive order value of 53%. So even though Tesla was down 9%, you still had a majority of the option activity, at least over 50%, specifically 53%, being positive orders. That is buying calls or selling puts. What more can you ask for? If you look at the dollar amount, $2.56 billion, if you guys don't track this like I do every single day, well, you might want to subscribe to the channel so you can stay up to date with this information. But $2.56 billion is a lot of dollars heading into Tesla. That is a couple days worth of option activity normally for Tesla. So to see this positive is very, very good. Now on Friday, you've seen 700 orders totaling $201.34 million with a positive order value of 42%. The positive order value looks a little weak here, but the dollar amount is 10 times, more than 10 times lower than what you've seen on Thursday. So you really can't draw any conclusions based on Friday. And if I were to net all of this out, you've actually been positive with the option activity for Tesla this last week. That is crazy considering Tesla's stock is down pretty big compared to before earnings. This is pretty exciting as well. Tesla is now advertising over 300 different ads around the world, 200 of which are in the US, the United States. But they're now doing 300 ads. Before, it was 200 ads total, around 150 in the US and around 50 ads everywhere else. Essentially, Europe is where they advertise a lot. Australia, they advertise a little bit for their energy storage business, but not all too much. Some of these ads are good. I like some of these ads. Now, some of them are, energy still, which energy is doing fantastic. So sure, advertise there. That's fine with me. You can see Tesla Model Y built in Texas SUV starting at $36,490. This one I really like because just a lot of people don't even know about it. A lot of even Tesla bulls don't know this. But Autopilot comes standard for the Model 3 starting at $26,490. People are under the notion that Teslas are super expensive still. I don't know if they live in 2021 or what year they're in, or maybe they just don't know because they don't know too many people with Teslas, or whatever the reason is. People think Teslas are expensive. This is just not true, and it's far from the truth. But again, you can only be so excited about this because these are Google ads. You really want to see Tesla advertise on the TV because that's really the demographic I think that just doesn't know much about Tesla. Unless you're in this community, obviously. You're going to be, older folks. You're going to be, people that maybe don't get on the internet as much, that just don't know about Teslas. You really want to see ads on football games. You want to see ads on news networks. You want to see those kind of ads on your TV. And whenever you guys see a Tesla ad on your TV, make sure to send it to me over on Twitter. Tag me in it over on Twitter. You guys can follow me. Just Michael Tyler. Go ahead, search that in the bar. You'll find it. Go ahead, give us a follow. And when you see the first Tesla ad, make sure to send it my way. If we do look at inventory numbers, you can see the Model Y is ticking up. The Model 3 is ticking up a little bit. The Model S and the Model X are kind of elevated to where they have been recently. We did just get news yesterday that Tesla raised the price of the Model X Plaid, so it looks like they're probably getting some pretty good demand there. And the Model X inventory is starting to fall a little bit over the past day or two, but overall, a little bit of an uptick in inventory. This is not a problem whatsoever. You'll see if you have a problem with inventory and you're just not there. You're really not even close to being there. This is where you've seen inventory for a long time, especially the Model 3 and the Model Y. Those are a little bit under their multi-year trend as far as inventory. Now, unfortunately for Tesla on the charts, doesn't look good. So your 200-day moving average, as I said, following earnings, after the earnings call, you were going to hit your 200-day moving average. That was almost a certainty. I was hoping to find some support here. It's possible that we still do. It's possible that we, rise to find support at that 200-day moving average, but you closed pretty substantially under it. About $3 under, about 1.5% under your 200-day moving average. That was not great on Friday. Again, a lot of this had to do with the broader markets being down. And if the broader markets do get worse, Tesla stock could fall a lot more. Now, possibly on a little bit of good news, hopefully, maybe in this upcoming week, Tesla does see a little bit of a bounce. Normally, when Tesla gets to this 30 level on the RSI, you do see a bounce. That's just an oversold technical bounce. The only time you really haven't seen that in the last 3-4 years or so is in January. So hopefully right at about this level, you will see to some degree a bounce. If, again, you can hold above that 200-day moving average, that is good news. But just where the markets are as a whole, if you start to get some downside here, well, Tesla stock could really see the downside. And like I've said in some prior videos, I do think Tesla stock more than likely hits that 190, 180 level. If the markets do get pretty rough, 150s in the cards. If it gets really bad, like your worst possible outcome, you could see Tesla around 130, although I think that is a very low probability. And it's not just Tesla that is seeing their margins and their profits taking a hit. Volkswagen cuts profit outlook on hit from raw material hedges. That's an interesting headline. Volkswagen cut its profit margin outlook for the current year on Friday, blaming negative effects from raw material hedges at the end of the third quarter. For Volkswagen, Europe's largest car maker, this led to a 2.5 billion euro non-cash loss that it will be unable to offset by the end of the year, it said in a statement, along with some preliminary third quarter results. Santa Catarina president Nava says Tesla will begin construction on the plant in the first half of 2024. It also noted that Santa Catarina's administrative technology platform real estate documents issued on land where Tesla will be installed and urban development processes are already firm and ready to be implemented. Deputy Secretary General of Hezbollah, Naim Qassem, has stated today that an Israeli ground invasion of the Gaza Strip will be a graveyard and that they have no choice but victory, and Israel has no choice but defeat. He further stated that they have received many calls that have warned Hezbollah from getting involved with the war in Israel, but that they are now in, quote, the heart of the battle. Israeli defense officials have stated they are expecting a massive escalation of rocket attacks from Hezbollah in southern Lebanon over the next week, and that they are preparing for the deployment of additional forces to the north, with Lebanon possibly soon becoming the, quote, primary war zone. That sure does not sound good for any hopes of containing this conflict with Hamas. The Israeli Air Force once again dropped leaflets over the northern Gaza Strip today, with them stating an urgent warning to the residents of Gaza: your presence to the north of Wadi Gaza is putting your lives at risk. Anyone who chooses not to evacuate from the north of the Gaza Strip to the south of the Gaza Strip may be identified as a partner in a terrorist organization. This is definitely bad news. So like I said, guys, half the story with Tesla stock and what happens is Tesla, news, earnings, things of that nature. The second half is what happens to the broader markets, and the broader markets look very weak here, and you are approaching a critical level in which I think you're going to find support or not. And if you don't find support at this critical level, you could fall big time. And that critical level is this downtrending line of support. You've kind of been in this channel. If you break under that, that's really bad news. And just on a technical basis, right, you could see that would not be great. It would probably set you up for a drop to that 200-day moving average, but it would also break this cup and handle formation. So on a longer term basis, you are seeing a cup and handle formation. And this dates back to 2021, right? This is the cup, this is the handle. Typically, this is bullish. You normally break out to the upside about 65-75% of the time in there, in that, statistical probability range. If you break down under your handle line, then you can see some pretty big downside, potentially even touch new lows for this cycle, retest the cup portion of the cup and handle. So not good if we break down under this line. And really all it's going to take next week is a drop of roughly about half of 1% to get to that line. You know, a 1%, 2% drop next week is going to put you pretty firmly under that line. And that would just not be great. Now, a couple different reasons the markets have been reacting so negatively over the past, couple of weeks now, a couple of months, really. Trending downwards is bond yields. I would say that's been number one in this story. But more recently, it's been this Israel conflict, because you could see a huge financial effect here based on this conflict if it were to spread. I've talked about this before, so I don't want to highlight this too much. But the Strait of Hormuz does control 20 to 30% of the global energy supply every single day. Obviously, if Israel over here were to get into it with Lebanon and, other regional players, maybe Iran, they exchange some, not so friendly words or missiles, well, probably oil is going to be affected there. And the price of oil is going to rise. That's bad for inflation. That is bad for the economy. Usually, oil is the thing that really tips you into that recession. Something usually breaks, but then that spike in oil is like the last domino to fall that pushes you into that recession. This all comes at a really bad time, because if you look at some indicators like the yield curve, well, it's flashing a red warning signal in your face that a recession is coming. This is the 10-year and the 2-year yield curve inversion. Normally, when you invert on this yield curve, that's usually not the problem. As you can see, these gray kind of bars, these gray shades here on the chart are recessions. You normally are not in a recession when this is inverted. Normally, you go into a recession right after you uninvert. Almost every single time. In the 90s, 2000, 2008, even during COVID for that matter. Back in August of 2019, you actually were inverted on the yield curve. And then what happened? You uninverted. A couple months later, you were in the Rona recession. Well, that is happening now. At one point, you were inverted 1.06% as of June of 2023, so not that long ago. And now you are only inverted 0.16%, 16 basis points. A couple more days like we've seen lately with the bonds, and you're going to be uninverted. And you're going to have your recession stop clock that starts. Usually once you actually uninvert, in between 3 to 5 months is when you actually go into a recession. So by the time you are actually inverting, you could be 1 month away from being in a recession. The government works with a lag. So usually by the time everyone says, oh, we're in a recession, you've been in a recession 3 months, because you're looking at 2 quarters of GDP. And by the time you're in that second negative quarter, you've already been in a negative quarter. So a recession already happened 3 months ago. So technically the start of a recession based on this could be coming in the next month or two, at maximum around 3 months. Again, if you actually do get uninverted, you're doing this at a rapid pace. You usually get a rapid rise in the yield curve uninversion right before that recession. So I think there is recession fears going on. There's obviously Israel war conflict fears going on. There's also the rise in treasuries. Like, even though if we do go into recession, does that mean the Fed's going to just cut rates down to zero? Obviously not. Would the Fed even cut rates? I don't know. I think you would have to see something bad or something actually break to get the Fed to immediately start cutting rates based on a recession. You're going to need to see deflationary forces really at play in the markets, in the economy, to get the Fed to act that aggressively. That's not exactly setting us up for a great market right here and right now, especially over the next couple of weeks and maybe even next couple of months. And again, your bond yields has been something that has really affected the markets for a while now. A lot of people thought it would have hurt the markets a lot more than what it has already, because in all reality, the Fed's raised like what, once or twice this year, like really not too much at all. And the treasury yields have risen well over 1%, like 1.5%, almost 2% this year. Yeah, almost 2% this year. If you're looking at from January, you were at 3.39%, you're at 4.91%. So the treasury yields have went way higher than, the same degree as the Fed has risen rates or raised rates. So this is a problem. This is really restricting the economy. The Fed raising rates doesn't necessarily restrict the economy immediately. The treasury yields affect everything immediately. If you're going to get a mortgage, well, mortgage brokers, they base their rates off the 10-year treasury yield. So the higher that goes, well, the more you have to pay, the higher the interest rate. And I'm going through that right now. Oh boy, is it nasty to try to buy a house. Sheesh. It is definitely not the same market it was the last time I bought a house in 2021. Oh my gosh, it is terrible. Those closing costs are egregious now because of the rise in the 10-year treasury, but it's also the 20 and the 30-year treasury as well. These rates are also at the highest levels they've been at in 15, 20 years. That's putting a lot of pressure on stocks because if you can get 5% locked in for 10 years, and if the Fed were to cut rates, the yields are going to fall, bond prices are going to go higher. Even as a 1 year, 2 year, 3 year trade, buying the bonds makes sense here. So that's already squeezing liquidity out of a starved market as far as liquidity. That's what Tom Lee has to say. We're going to talk about what he says about this market in the next video. So make sure you guys are staying tuned for that one at 9 p.m. tonight. He basically says the markets are completely starved of liquidity. That's why the gains you have seen in the markets are really only in a couple different stocks, the Magnificent Seven, if you will. But nonetheless, on Friday, you did see 10-year treasury yields fall about 7.5 basis points. This was a fear move. Okay, so bonds are a little bit complicated to understand until you fully understand them. So bond yields work like a dividend stock, right? If a $100 dividend stock, the share price is $100, it pays you out $5 a year. Well, if it pays you out $5 a year, that is a 5% yielding dividend stock. Well, if investors don't want to own that dividend stock because for whatever reason they don't like the company, they think the dividend is unsafe or whatever reason it is, say the stock goes to $50. Well, the company didn't change their $5 dividend. Imagine it's still the same. Now that dividend stock pays you 10%. Well, that's what's happening with the bonds. If you take a look at TLT, nobody wants to own it for a long time now. So the actual dividend, the payment on the bond, stays the same. The price of the bond fluctuates, thus affects the yield of the bond. Well, investors haven't wanted to own them, so yields have went higher. But on Friday, investors did buy the bonds at least a little bit. TLT was up 0.57%. This is the ETF that tracks the 20-year treasury. TLT is by far the most actively traded treasury ETF out there, so that's why I like to look at TLT. It's the 20-year. Again, it was up 0.57% in regular trading, up 0.07% in after hours. If there is a broader conflict in Israel, if there is fears of a recession or problems out there in the economy, investors will buy the bonds at some point. Yields will shoot down, and this will be a good thing for the markets. But until you really see a big drop in yields, probably it's not going to affect the markets all too much. And controversial, and in a weird way, or maybe it's a weird way to think about it, when investors are piling money into bonds, well, if it's a fear move, that's not seen as good, right? You want to see money flowing into bonds because the Fed has defeated inflation and the Fed is starting to lower rates. That's the rise in bonds that would be bullish, the fall in yields that would be bullish for our markets. If investors are fearful of a broader regional war and they are buying the bonds, that's not great. And it's not sending you a good message because big money typically knows more than you do. So you really want to watch the money and how the money is moving. And that's where you even get into more alarming safety assets like gold, which gold was up another 0.27% in regular trading on Friday. It was up a lot more at one point. It was up over 1%. You still did end green, but you did fall from the highs quite a bit. But recently, ever since this conflict has started, gold has really just been on a face ripper rally almost every single day. Again, this is not great news for stocks. So that is going to go ahead and conclude this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comments section. If you guys would like to come trade with us live in real time, link down below in the description of this video as well. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.